Coin DCX, your gateway to crypto. Co-powered by Green Lamb Laminates, Gustakhi Saaf.
You're watching Business Today. I'm Nabila Jamal. We'll take you through the top business news. First, the headlines. Over 800 essential medicines, including Paracetamol, to get more expensive from 1st of April. National Pharmaceutical Pricing Authority allows price hike by more than 10%. And the centre will depute a team of experts to Vellore and Pune to probe recent incidents involving electric scooters catching fire. Both Ola electric scooter and Okinawa's electric bike had been tested and received type approvals before being launched into the market. Sensex snaps 3-day losing streak, ends 231 points higher. Nifty tops 17,200 mark, led by auto, bank, oil and gas, metal stocks. Shares of PVR and INOX Leisure jumps after the multiplex operators announced their blockbuster deal. The merged company will now be named PVR INOX and will create India's largest firm, almost a film exhibition entity with over 1,500 screens. GAIL jumps 3% as board to mull share buyback on March 31st. This is second such move by state-owned gas distributor in many years. Now, in a major development, the National Pharmaceutical Pricing Authority has announced a hike in prices of around 800 essential drugs from the 1st of April. Prices of medicines used to treat fever, infections, heart diseases, high blood pressure, skin diseases and anemia will likely increase. These drugs, in fact, includes drugs like paracetamol, azithromycin and several others that are now only going to increase as the weeks to come. Pharmaceutical industry has welcomed this move, the government's decision, stating that this 10% hike in scheduled drugs is after many, many years. The central government has reportedly begun a probe into recent incidents of fire in electric wheelers manufactured by Ola and Okinawa. In fact, according to sources, a team of independent experts have been sent to Vellore and Pune to take a quick look at the causes behind the fires. The team will be probing whether incidents were being caused by manufacturing defects or some external factors here. An Ola S1 Pro e-scooter had caught fire in Pune on Saturday, and that video was widely shared on social media. Ola, of course, has independently ordered a probe now into this incident. The weekend was an action-packed one for the country's entertainment industry, with PVR and INOX joining hands to create a theatre Goliath. But what does it really mean for you as a viewer who goes out with the family to watch movies in theatres, and also as an investor? Business Today TV analyzes here the proposed mega merger, all for you. Let's have a look.
It is the biggest consolidation in an industry which has just emerged from the toughest of times. Empty seats, theatres bleeding money. It was a nightmare intermission that wouldn't just end for the film industry. The merger of PVR and INOX will create a behemoth. With 1,546 screens in 341 properties across 109 cities. The merged entity PVR INOX Limited will have a whopping 50% market share in multiplexes and a 42% market share in box office collections. So will this combined firepower lead to ticket prices rocketing, especially in larger cities? High-end screens of PVR in Gurugram have been charging as much as 2,100 rupees for one ticket for the S. Rajamouli directed RRR. That's not all. According to Edelweiss research, ticket prices have risen nearly 14% in the past year. However, the growing presence of the likes of Netflix, Amazon Prime and Hotstar may force theatres to moderate their prices.
Yes, there is an ability to increase the prices because it's the number one and the number two player, and they have an audience which come and watch in their own, own screens. So they have the ability to increase the prices. How the market would behave to that is something which only time will be able to say.
The announcement also set Dalal Street abuzz. fueling a rally in both stocks, which were already soaring high since the start of this year. Shares of both PVR and INOX Leisure are up around 50% this year, with INOX touching lifetime highs after the announcement. So if you have missed out on this rally, do you still have the time to invest in these shares?
One should not do fresh buys, but one should continue to hold PVR.
The balance sheets are still under slight pressure. The free cash flows depend a lot on the return of traffic, whereas the valuations are already assuming that the footfalls will increase dramatically and these guys will go and become very profitable.
The biggest takeaway from the merger is the bargaining power the size gives PVR INOX. The group will be in a better place to bargain with property owners on rentals, with film producers and percentages, with advertisers, and even with ticket booking intermediaries like Book My Show and Paytm. With Tanya Aneja, Bureau Report, Business Today Television.
Now, India's largest telecom operator, Reliance Jio, has launched 259 rupees plan that comes with calendar month validity. This new plan will help prepaid users remember just one recharge date every month. This means that customers will have to remember a single recharge date for their connections. Jio is the first in the industry to launch the calendar month validity prepaid plan here. In fact, this 259 rupee plan comes bundled with 1.5 GB daily data and unlimited calling, along with other benefits on the validity of exactly one calendar month, irrespective of whether a month has 30 or 31 days on that. Ruchi Soya's 4,300 crore rupees follow-on public offer shut for public participation today. In fact, the offer was subscribed 3.6 times. A total of 35% of the issue was reserved for retail investors and saw a 90% subscription. Employees put in bids for 77,616 equity shares against the 10,000 shares reserved for them. Ahead of this FPO, the company had raised 1,290 crore rupees from anchor investors. The offer is entirely a fresh issue of shares. In fact, the company was bought by Patanjali Ayurved after going through insolvency. GAIL was up over 3% in trade today as the state-owned gas distributor said that the board will be meeting on the 31st of March to consider buyback of shares, marking the second such move in as many years. Now, share buyback refers to the repurchasing of shares by the company that issued them in the first place. A buyback occurs when the issuing company pays shareholders the market value per share and reabsorbs that portion of its ownership that was previously distributed among public and private investors. Now, the government owns 51.8% stock in the company, though it is uncertain if it will be participating in the buyback at all. Former NSC MD and CEO Chitra Ramkrishna's judicial custody has been extended until the 11th of April in the co-location case. Now, the Delhi court order came even as the Finance Ministry clarified on the scam in Lok Sabha today. In fact, the ministry informed the lower house that the scam was perpetrated due to lack of sufficient checks in the system architecture at NSC. The ministry also claimed substantial progress by the CBI in the case, saying that SEBI had not come across any external device installed in the system. Meanwhile, the Lok Sabha was informed that there was no involvement of any foreign exchange in this scam. The centre has laid out a plan to use surplus land owned by government agencies. The National Land Monetization Corporation, as the name suggests, will be established by the government to oversee and manage land monetization. The wholly owned government company will also look after building assets of central public sector enterprise and other government agencies. Listen in as MOS Finance Bhagwat Karad explains the purpose of NLMC.
NLMC 9 मार्च 2022 को जो सेंट्रल कैबिनेट की मीटिंग हुई उसकी तरफ से गठित हो चुके हैं और एनएलएमसी और डीपम ये डिसइन्वेस्टमेंट करने वाले के लिए डिपार्टमेंट है, अलग डिपार्टमेंट है और एनएलएमसी में लैंड जो है, जो सरप्लस लैंड है और उसके साथ जो नॉन यूज लैंड है, जो क्लोजर सीपीएससी होने वाली है, उसका लैंड इकट्ठा करके उसका मोनेटाइजेशन करने का गवर्नमेंट ने डिसाइड किया है। ये इसमें डिफरेंस है। जो गवर्नमेंट की 100% पीएसयू है उसी का ये नेशनल लैंड मॉनिटरिंग कॉर्पोरेशन स्कीम में लिए जाएंगी और जो आइडियल लैंड पड़ी है, आइडियल लैंड हो, बिल्डिंग हो, जिसका कोई भी इनकम नहीं हो रहा है, जो सरप्लस लैंड है उसका कोई इनकम नहीं है ऐसी लैंड को इकट्ठा करके उसका मोनेटाइजेशन करने का गवर्नमेंट का प्रयास है, जिससे इकोनॉमी बढ़ेगी, जिससे जॉब बढ़ेगा और गवर्नमेंट को उसको फायदा हो जाएगा।
Now let's take a quick look at what else is making news in the corporate world. Adani Total Gas is making its foray into electric mobility by launching its first electric vehicle charging station in Ahmedabad. According to the company, the charging station will enable quick turnaround time for EV owners with best-in-class fast charging technology. Now the company aims to expand its network by setting up 1,500 EV charging stations across the country. Meanwhile, Motherson Sumi Wiring made a decent debut on Dalal Street. The shares of the demerged entity of Motherson Sumi Systems gained 5% after listing at 66 rupees. Now, online travel service provider Yatra Online has filed papers with SEBI for its initial public offering. This includes a fresh issue of shares aggregating up to 750 crore rupees. Now, the company also announced appointments of Rohit Bhasin, Deepa Mishra, Harris and farmer bureaucrat Ajay Narayan Jha as non-executive independent directors. All right, on that note, I'm going to slip into a short break. We'll be right back to Business Today. Stay tuned.
She's the wife of Ukraine's President Zelensky, and she fears for the safety of her husband. In a written exchange from an undisclosed location with a media house, the 44-year-old revealed that she calls her husband every morning, but only after praying for his well-being. Meet Olena Zelenska, the First Lady of Ukraine. She is the wife of the Ukrainian president, and she has been standing like a strong pillar by his side during these shattering moments of the war. Olena was born in the same city where President Zelensky was raised. She and Zelensky were schoolmates, but they were not acquainted then. Zelensky once said that he knew many of her classmates, but not Zelenska herself. They got to know each other much later when Zelenska was studying at the Faculty of Civil Engineering at Kryvyi Rih National University. She reportedly had a boyfriend at the time, and he was busy trying to make a career in comedy. It is said that it was comedy that united them. Olena was a scriptwriter, and Zelensky is one of the founders at Kvartal 95. It is a leading provider of entertainment TV content in Ukraine. Later, Zelensky got her on board as the scriptwriter. Zelenska was one of the writers of the show Servant of the People. The relationship between the couple developed gradually. They dated for 8 years before getting married on 6th September 2003. On 15th July 2004, their daughter Alexandra was born. On 21st January 2013, Zelenska gave birth to their son. Zelenska became the First Lady of Ukraine on 20th May 2019 with Volodymyr's elect. In an interview, she said, and I quote, "I am a non-public person. I prefer staying backstage. My husband is always on the forefront, while I feel more comfortable in the shade. I am not the life of the party, and I do not like to tell jokes." Olena has been a part of many social causes. Her first initiative talked about nutrition reform in Ukrainian schools. In December 2019, during a speech at the 3rd Ukrainian Women's Congress, Zelenska initiated Ukraine's accession to the G7 International Initiative on Gender Equality. She also started an initiative to spread the Ukrainian language in the world and the introduction of Ukrainian language audio guides in the most iconic places, in particular in the largest museums in the world. Zelenska has been drawing attention to the plight of women and children too. She is considered as one of Ukraine's most influential women.
Welcome back. In a highly volatile session, benchmark indices made a smart comeback from the morning lows to break the 3-day losing streak and end in green. Sensex gained 231 points to end above 57,500. Nifty too bounced back to shut shop above 17,200. Now, public sector, banks, auto and metals marched ahead in today's trade. Let's have a quick look now, cutting across to our global business editor, Udayan Mukherjee, for his take on the markets. You know, though markets made a smart recovery today, the Russia-Ukraine war and increase in inflation really continues to weigh on the markets. How do you see the markets' performance in coming weeks with RBI, MPC also just 10 days from now? Udayan.
It's difficult to project a picture where the market has major upside from here on, Nabila, because I think we have had a decent pullback already. The market collapsed to below 16,000 on the Nifty, and we're already back to more than 17,000. In fact, right now where the market's trading is almost the midpoint of the high and the recent low, between 18,600 and 15,800 and change. So some recovery. Maybe the market panicked and lost its nerve a little bit when the war broke out. And on realizing that maybe it had got oversold, we've had a pullback to 17,200, 300 levels. But from here on, given the kind of uncertainty which is still swirling around in the environment, it's difficult to suggest that there will be a major runaway rally from here on. I think the market needs to pause here and take stock of the situation. Crude prices are still very high. The war situation is not resolved. Inflation is very sticky. I think central banks still have a job to do with interest rates during the course of the year. And it's increasingly looking like one of those years where it will be difficult to eke out any kind of gains for the market. So at this point, having seen the pullback already to reasonable levels, I think the market will probably pause and consolidate here best case. If the situation does not resolve itself globally, there is room for another dip a few weeks down the line. So I think we're still in volatile terrain, and people should not get carried away to think that a firm bottom has been formed for the year. It may be for the near term, but in the medium term, it's still going to be a volatile year, and people should tread with caution. With me to talk about the kind of pullback we've seen in the market after that disastrous fall post the Ukraine war is Krishna Kumar Karwa, Managing Director of MK Global Financial Services. Krishna, good to see you after a long time. Are you confident enough to say now that a bottom is in place for the market, or is it too early to say that?
So then I think the data and the statistics keep on changing, and as we have no clue about how the situation in Ukraine, Russia will finally settle down. To call the bottom of the market just because stock prices have stabilized would not be the right way to look at things. For us, I think what we should look at is that the high oil prices and the impact on the corporate performances, how that behaves, how that pans out in terms of the quarterly numbers and the guidance for the next few quarters. I think that will be very important to see from a short-term perspective if we have to look at the bottom of the market. Apart from that, I think we have seen relentless selling from FPIs, and it is not only for India, but for other emerging markets also. So far, we have seen that the domestic flows have been very robust, and which keeps able to absorb the relentless FPI outflows. But how long will this domestic investments come into the markets? That is also a key question to look at. So to call that the market has bottomed out, yes, temporarily, yes, it looks like. But if you look deeper into the market, which means that, okay, the headline indices seem to have stabilized. But if you look at the overall the top 500 stocks, more than 60% of the stocks are quoting below their 200-day moving averages, which means that they have all entered into kind of bear territories. So I would be very circumspect before calling the bottom of the market.
Let me rephrase the question, Krishna. Given the circumstances that you spoke about just now, I think, should it be fair to assume that some things have changed for the market fundamentally too since the start of the year, and therefore it may be difficult for the market to reclaim its highs or strike out meaningful upside in the next few months?
Yes, I think the whole yes, the market situation has completely changed. Let's put it this way, that this kind of geopolitical situation the market has never seen in terms of US, UK, US and Russia being almost at loggerheads with each other, and Ukraine being a part of it. My sense is that the whole geopolitical situation, how it is evolving, I don't think so we have an answer to that question. And that will possibly have a overbearing on the market for some time to come. The whole deglobalization, which was picking up some steam even before this, has also got accelerated post this crisis. How this will pan out, again, we are not too clear. So the markets are in a state of flux in terms of how to value stocks or what multiples that stock should be given, A, in a rising interest rate environment, and B, in an environment where there is too much of geopolitical state of flux. So I think that fundamental shift is happening in the market. Let's put it this way, that in the last 10 years, whenever there has been challenges, you always had the US Fed coming in, giving more liquidity, and the markets were in a positive territory, or there was a kind of a bull market which was always there. But I think that card is no longer been available to us. So the markets will have to learn to live with reducing liquidity and a global environment which is uncertain. So I think to answer your question, that today the market, if I have to look at it, is grappling between whether to buy to value or to be in growth. That is a key question. And also all highly valued stocks where we were always questioning in terms of how to justify those valuations, be it in the tech companies or be it into the consumer companies, etc., globally and locally. I think there is a huge question mark on valuations versus the growth that many of these companies are showing.
Now, you spoke about domestic liquidity, and it has held the market up in the face of very serious FII flows so far. But when you talk to HNIs or the kind of domestic fraternity that you reach out to, what's the sense you get? Do you think this kind of resilience will hold out, or at some point do you think even the patience and the courage of domestic investors will be tested?
Yeah, I think the human memory always looks at the immediate past. And today the human memory or the investor memory is colored with what they saw post-March 2020. And whoever invested in the last 12, 18 months or did not panic at that point of time, they have reaped good portfolio gains. So that is one reason which makes investors feel that, okay, this crisis also, do we have an answer how it will unfold? Nobody has an answer to that. But hopefully solutions will be found and things will improve. So that is one thing which is holding at the back of the investors. Second is there are not too many options, which means that interest rates being what they are in terms of, so where do you put your money? So you stay invested in equity is kind of a theme which has become more and more prevalent among the investor community. So this is, I'm talking of the average retail investor who devote time beyond normal as far as their equity portfolios are concerned. The super HNIs, the large family offices who have their own understanding and views on everything, I think they are very clear in terms of that in the next 12 to 18 months, possibly the returns on their portfolios are going to be muted. A lot of gains have already been made in the last 12, 18 months. And with inflation being what it is and nobody has a clue on how high it can go, so portfolio returns will be muted. They take cash calls and they are taking cash calls in terms of exiting equity portfolios and going into cash. So there is a different segments of market. The one which takes active portfolio management, yes, they are taking these kind of calls. But the average retail investor, I think he is staying put, which can be seen by the kind of regular inflows we are seeing in the domestic mutual funds.
While none of us can call the bottom or figure out how this market situation will pan out over the next 6 months, Krishna, the one thing that people do at such times, especially with the way crude has moved, is that they rejig their portfolio. They say, okay, we'll be in these sectors now and we'll avoid these sectors now while remaining invested in the market. Do you think that's a prudent way of looking at it, that you don't take a massive cash call and exit, but you at least realign your portfolio to the new realities?
Absolutely. I think that is what active portfolio management is all about. And you should certainly be looking to do that. And that's what investors are doing. I think there what is happening is that sectors which are relatively under-owned, they are showing a lot of resilience. And most of these sectors would be sectors which have not done well over the last so many years. and where valuations are reasonable, namely sectors like your fossil fuels, your power, including metals. So these are some of the sectors where there has been a lot of under ownership, and they are showing a lot of resilience, and maybe possibly they should outperform even going forward. The next set of sectors which I believe can possibly do well would be sectors which would benefit out of, I think, the whole economic life going back to normal now post 2 years of COVID. So sectors like hotels and aviation, or even your exhibition theaters, those kind of sectors, they could possibly see a lot of investor interest.
All right, you can watch the full show on businesstoday.in and, of course, our YouTube channel. But for now, thank you very much for watching.
You are watching India Today.